In this segment, I'll frame the stability of collusion around two big levers and then unpack concrete factors behind each. Lever 1, it is market power. The greater cartel's market power, the easier it is to sustain collusion because companies can raise prices without immediately losing customers or being disciplined by outsiders. Strong market power increases the payoff from staying coordinated and reduces the reward of deviating. Lever 2, costs of facilitating, so starting, and maintaining the collusion, so to keep it going. Collusion requires agreement, monitoring, enforcement. The higher this coordination and maintenance costs, the more fragile the cartel. Low cost make it easier to align prices or market share, spot cheating, and punish it credibly. So, in short, stability rises when market power is strong and coordination costs are low. Now, let's break this into concrete, teachable factors. First one, market power. Let me just remind you, the stronger, the more market power, more stability. So, what are the factors that influence market power? First of all, barriers to entry. These are external from the companies. High legal, capital, or capacity barriers make it harder for the outsiders to undercut the cartel. With entry kept at bay, collusive prices are more durable. Second, concentration of sellers. It is a factor that has got an internal feature. Fewer larger firms, usually with high Herfindahl-Hirschman index, typically means easier alignment and greater collective power. A tight oligopoly with few players can set focal points and monitor each other more easily. The third one, concentration of buyers. This is an external factor. Powerful, concentrated buyers make collusion harder to sustain. Large purchasers negotiate aggressively, demand individualized deals, and can detect and resist common surcharges. They may even sponsor entry. In effect, high buyer concentration weakens seller market power and reduces stability. The next one is price elasticity of the demand. Again, this is an external factor. When demand is inelastic, higher prices don't cause big volume losses. So the cartel's reward for holding the line is larger and more predictable. With highly elastic demand, a small deviation can steal a lot of business, increasing the temptation to cheat and lower stability. This concludes all the factors that influence market power. Now, let's move on to costs of facilitating and maintaining the collusion. Let me just remind you, the higher the cost, the less stable the cartel, the less stable the collusion is. So, let's try to break it down into more detailed factors. First of all, number of enterprises. This factor is internal, of course. More companies mean more voices to align, more opportunities for side deals, and higher monitoring costs. Each additional participant in the cartel, in the collusion, increases the chance that someone deviates or runs to authorities for leniency. Product differentiation. This factor again is internal. The more differentiated the offer, the harder it is to agree on common pricing rules and to detect hidden discounts disguised as customization or bundles. Differentiation raises the cost of coordination and policing behavior. The next one, Cardle's participant cost, similarity. Okay, again, this factor is internal. When companies' costs are similar, it is easier to agree on common price path and to see who's cheating. Divergent costs make some members itch to undercut, raising enforcement costs and fragility. Similar costs lower lower costs of maintaining stability, maintaining and facilitating the cartel, more stability. Technological change, again, this factor is external. Fast changing technology disrupts agreed rules. Costs move, product attributes shift, and pricing logic needs constant realignment, renegotiations, and remonitoring raised maintenance costs, reducing stability. Next one, demand growth, stability, more or less. This again is an external factor. Stable or slowly changing demand lowers the cost of maintaining a shared understanding, shared collusion. Signals are cleaner and the deviation is easier to spot. Volatile demand, fast changing demand creates noise that can mask cheating and forces frequent recoordination, raising the costs of facilitating and maintaining collusion and lowering its stability. The next one, frequency of transaction. This one is a little bit tricky. This factor again is external. High frequency, small transactions, especially in business to customer or fragmented business to business, can increase monitoring and enforcement costs. Too many prices to watch, too many opportunities to hide selective discounts. Less frequent, larger, more transparent transactions can lower policing costs. In some business to business tender settings, with clear cycles, frequent structure interactions can help detect deviation. But when frequency explodes and transparency is low, costs rise and stability falls. Putting it together, to assess stability in any market, ask two questions. The first one, do the structural condition grant the would-be cartel meaningful market power, higher seller concentration, strong entry barriers, low elasticity, fragmented buyers? The second one, are the coordination and maintenance costs low enough? Few firms, similar cost, limited differentiation, slow technological change, stable demand, manageable transaction frequency to allow sustained alignment and credible punishment. Let's focus on European and Polish angle. Many Polish public procurement markets feature repeated tenders with defined lots and public outcomes, helping detect patterns but also creating many pricing moments. Where lots are numerous and customized, policing cost goes up. Where buyers are large and professionalized, for example, central purchasing bodies, seller market power is weaker, reducing stability of any attempted collusion. Okay, let's finish this. Stability lives at the intersection of strong market power and low coordination costs. If either pillar weakens, buyers consolidate, technology accelerates, firms' costs diverge, collusion becomes harder to sustain, and the risk of cheating and breakdown rises.